Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor coming out of Singapore. Today we have David Kuo, our regular guest on Thursday, but coming out of Penang. Great to have you on the show, David.
Hey, Salamat Hari, Brian. I'm overlooking the Andaman Sea, by the way, which is a really good backdrop. I should actually turn the camera the other way around so you can actually see the Andaman Sea. But Salamat Hari.
Now, David, thank you very much. Now, before we get your insights, I'm going to take a look at how stock markets are performing. But before that, how cryptocurrencies are performing. Bitcoin is at 20,364. It's down 0.77%. Ethereum is at 1,554.21. It's down 2.26%. Now, looking across the regional stock markets, the SGX is down 1.22%. And then if we look at other regional markets, we've got Bursa Malaysia, which is down 0.96%. Shanghai is down 0.59%. The ASX All Ordinaries is down 1.7%. The Nikkei is down 0.06%. The Hang Seng is down a whopping 2.88%. And rounding up the numbers, we've got the Kospi, which is down 0.23%. Now, David, what's your view on the market performance in the first half of the day? It's a sea of red, obviously.
Well, you said down 9 times. Can you believe that, Brian? You said down 9 times. I never fail to disappoint, do I? You know, wherever I'm on, the markets are down, right? But it's not my fault. Blame
It's
it
not
on the
your
federal.
fault.
It's not my fault. Blame it on the Federal Reserve and Jerome Powell. And what he did last night was to raise the Fed fund rate by 3/4 of a percentage point. So that is 0.75% increase in the Fed fund rate. And all those people who were hoping that the Federal Reserve would pivot in some way, he did not pivot at all. And in fact, he said that inflation is still a problem and that there is a long way to go. And so we're going to be seeing interest rate hikes. And as a result of that, the dollar is actually a little bit stronger. So there is one up at the moment, which is the US dollar. And I don't think that's doing anybody any favors over here with a strong US dollar. So that's basically it. When interest rates go up, generally stock markets go down. And that is precisely what has happened. So all the markets here in Asia are down as a result of the Fed Reserve increasing interest rates.
But one of the things that actually goes up when interest rates goes up is bank earnings goes up. And we've had great stellar earnings out of DBS Bank in Singapore.
I know. I mean, you take a look at these quarterly results, profits up about 33%. And what was driving the profits was the net interest income, which is really a no-brainer when you think about it. When interest rates go up, what generally happens is that people who borrow money from the banks will have to pay more interest. And also at the same time, the banks are very slow at increasing the interest rates for savers. So what happens is that net interest margin starts to widen. And when that starts to widen, the net interest income starts to increase. And that is really what is driving the banks. And that is part of the reason why a lot of people have been going into the banks over the last year or so. But what we actually saw today was that DBS Bank shares were actually down about 1%. So is that a buying opportunity for people? And I would say probably yes, because I think we're going to see a lot of interest rate hikes coming, and therefore I think the banks are going to be making a lot of easy money for a long time to come, Brian.
Now, David, we've had 475 basis points rate hikes from the US in a row. Many economies around Asia have been laggards in terms of raising their interest rates, RBA being one of them. What's your view on how this is going to impact Asian currencies moving ahead, as well as the overall outlook in Asia?
I think they will have to follow suit because they have no choice. Inflation is one of those things that spreads around the world. I mean, we have a look at inflation in the US, for instance. I mean, that's running at about 9%. Here in Singapore, it's running at about 5%. Malaysia is a little bit lower. But generally, what we are seeing is that inflation is like a virus. It just spreads all over the world. And central banks have no alternative but to go and increase their interest rates in order to try and sort of control inflation. So whilst you are right, some of the central banks have been laggards, they will have to catch up eventually. it's not because the currencies are going to start weakening, but because there is going to be inflation. There is going to be inflationary problems. And the only way you can control inflation is to try and sort of remove some of that excess liquidity in the market. And you do that by withdrawing the cash that is swirling around the respective economies by increasing interest rates and attracting money back into, say, bank accounts or into bonds. And that is generally what happens. And that is also why we expect stock markets to go down. But remember this, Brian, that as far as investors are concerned, inflation will eventually be beaten. It might be a very painful realization for a lot of people, but inflation will eventually be beaten. And when that happens, then of course we'll actually sort of see the share prices start rising again. And there is something that I would like to point out is that I run a portfolio and it's got 20 stocks in there. And of those 20 stocks, 12 of them reported results, earnings last month. 10 of those results, those companies reported higher profits than a year ago. So that goes to show that there are companies out there that have the ability to cope with higher inflation, to cope with higher interest rates, and deliver to shareholders the kind of earnings and the kind of dividends that we require. And that is part of the reason why I'm sort of sitting here in Penang at the moment, because I don't really care what the Fed does. I do care about the companies I invest in. And as long as I know that those companies are solid, I'm quite happy, Brian.
Now, David, I want to swing our attention to the US and the tech sector in particular. Now, Twitter is reportedly ready to cut 3,700 employees. Now, I want your view on this hypothesis that perhaps this is the bellwether for the start of big tech to start laying off staff. And people like Meta and Airbnb, which has just reported poorer than expected earnings, perhaps could be candidates for that. What's your view on this?
I think so. I think it's kind of inevitable, because if you start seeing a slowdown in revenues, profits are going to follow at the same time. And the only way that you can try and sort of maintain the kind of profits that you have is to cut costs. And one of the simplest costs to cut is, of course, labor costs. And are we going to be seeing layoffs? I think the Federal Reserve would like to see layoffs. We got some job numbers from the US yesterday night, and those job numbers were quite strong, particularly in the services sector. But I think generally what the Federal Reserve wants to see is higher unemployment, which therefore means that there's going to be less pressure as far as workers are concerned, putting pressure on companies to try and raise wages, because wages are the most stickiest thing. Once you raise the wage for a worker, you can't take it back. And so I think what the Federal Reserve would like to do is to see some kind of moderation in terms of the wage inflation. And you may be right. Twitter may be the bellwether, and others may start to follow suit. So far, a lot of the tech companies have said they're slowing down their hiring process. They haven't actually said we're laying off workers. But what comes after slowing down your hiring process is to start laying off people in order to reduce your cost base. So I think you could be right. I think you could be onto something there, Brian.
Now, David, as always, thank you very much for your sagely advice, and thanks for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.